What's up, YouTube? Hello and welcome back to Not Dumb Money. In today's video, I'll talk about one of the larger positions in my portfolio, Amazon.com Incorporated. I first added Amazon to my portfolio last year. I added to my position earlier this year, and by the end of July, Amazon was 12% of the entire portfolio. It is my third largest position behind Microsoft and Disney. So just in case you're here because a time machine dropped you off from the early 90s, let me tell you a little bit about Amazon. Founded by Jeff Bezos in 1994, Amazon does e-commerce, digital streaming, cloud services, and frankly, so much more. Oh, and just for fun, they have some actual physical stores because, why not? The company operates Amazon.com, Amazon.co.uk, Amazon.de, Amazon.ca, and many other online marketplaces globally, and their products are delivered to every corner of the world. There's Amazon Web Services, the world's largest provider of cloud computing services with a market share of 32%. Let's put this in perspective. Microsoft Azure, which is the world's second largest, has a market share of 18%. Google Cloud in third place has a market share of just 6%. They own Whole Foods, that's 500 stores in North America. They own Twitch, the world's leading streaming service for video games with more than 15 million daily active users. They bought Ring. Yes, this guy was on Shark Tank, and they bought his company. They have a board of heavy hitters. This guy, Jeff Bezos, who by the way is buff now and the richest person in the world, is president, chairman, and CEO. Also on the board are the former CEOs of MTV, PepsiCo, and Palm. Really? Palm? Remember the Palm Pilot? The COO of Starbucks is also on the board. In addition to what I've already mentioned, there's Amazon Prime, Alexa, Amazon Drive, the Echo, the Kindle, tablets, video streaming, music streaming, Audible. They also tried to make a mobile phone. The list goes on and on. Amazon has had its fair share of controversies too. Claims of counterfeit products on their marketplaces, data collection, and antitrust issues to name a few. But that has not slowed down Amazon's quest for world domination. Now, before we get into some real analysis, please subscribe to the channel if you haven't already, because that would be amazing. All right, let's get into it. In its latest earnings report, Amazon crushed analyst expectations. Guidance was for $78 billion in revenue and break-even operating income, but Amazon delivered $89 billion in revenue and $5.8 billion in operating income. We're talking growth in North American retail, growth in international retail, which turned profitable for the first time, growth in Amazon Web Services, and growth in subscription services. Revenue growth is 40% year over year. Sales at physical stores are down, understandably, but everything else was up. They have a solid balance sheet too. They're taking on more debt, but their cash flow can support it. According to their latest numbers, Amazon has $33 billion in debt and $71 billion in cash and marketable securities. Amazon is adding to its cash pile year after year after year. We all know Amazon is growing, but the real question is, does the stock represent good value today? Many of the analysts covering Amazon issued their latest reports July 31st after the latest earnings. There is a heavy buy consensus, with the target prices ranging from $3,500 to more than $4,000. But when you're paying more than 150 times earnings and more than 50 times free cash flow, what are you getting in return? Well, the price to earnings ratio to me is not so relevant for a company that's delivering and is expected to continue to deliver high growth. Amazon stock trades at around 5 times sales, which is not excessive. As Amazon continues to grow revenue, its margins will improve and its earnings will grow. It's difficult to say what margins will get to, so I'm not going to guess. But I will say this. As revenue grows, we should see a gradual reduction in the price to sales ratio. But as margins and earnings also grow, the price to earnings ratio will drop at a higher rate. I don't think we'll get there anytime soon. But in that future, we can start talking about dividends and share buybacks. For now, I continue to hold, as Amazon is growing at hyper speed and is showing no signs of slowing down. That's it for now. Thank you so much for watching. What are your thoughts on Amazon? Are you bullish, bearish, indifferent? Let me know in the comments. If you enjoyed this video, please do me a huge favor and hit that like button, subscribe, and turn on the notifications bell. As always, it's been a pleasure. Much love. Peace.